The election is over. The market exploded. Is it going to continue? We are presently on November 7th, and we're looking at a longer term story. Now that the election is over, we can begin to emphasize what the next year is likely to produce and the reasons for it. Okay, in our last video, we were talking about 3 times the 49-week cycle, and the picture of that implied that we're going to go topping until the 5th of November, that will top out around the 5th of November, and that will go down to the 22nd, and it was a fairly sharp decline. The reality is it's difficult to find one pattern that actually represents what we really believe to be the best fit. But in the prior video before this, we also talked about the 1986 market, which has a similar thing. It topped out around between the 5th and the 12th of November, had a breakdown to the 20th of November, then shot up higher and had a pullback in December. But the pullback, even though it was most of the month of December, it was still minor. Okay. And then January starts shooting up again. Okay. This is the kind of thing that we think is going to happen. The timing is very similar. We still think the market is topping the next few days. It'll go sideways for a couple of days. It's probably going to go sideways to up until as late as the 19th of November, which is an update. It's a different one than the original forecast. And we were looking for 6,100 to 6,200 in December. And the same thing now. We're still not expecting an explosion that just keeps on going right away. And after a pullback in late December to pretty much at the end of the year, early January, we expect a low that should take the market up very strongly again. And that's where we'll see potentially significantly higher prices in 2025. Okay. Now, let's look at some of the pictures that represent what we're thinking about. Yeah, this is for the swing traders, and it also gives veracity to understanding why we're thinking what we're thinking. So we have a software program here that shows an overlay of different years. And what we see is that on a short-term basis, the 7-year cycle has been repeating extremely closely to the present market for over a year. You can see how in the future, this is what the 7-year and 3 times the 7-year cycle, the 21 years ago and the 7 years ago, they both agree that the market is right now, we're right here in this early part. Let me put up the present one so you see the timing. The red is the present timing. Don't worry about the price. That's the way the software works. We're right here, and we should come down into the late part of November, and then December, January, February, March. Actually, these are 10 trading day windows. So this would be December, January, a breakdown in February, and then it goes up again into March and April. Okay, so these are the 2 variations. The 7-year cycle is in blue, and it basically goes up into late January, which is our expectation. And later in the year, it goes up into the August high, which is where the other one, the 21 year, does not do the exact same thing. Now, look at the last 12 months in the 7-year cycle. The correlation is 95%. So the high probability is that this is pretty much what's going to happen. And going forward, basically where we're at right now is have a little dip for a few weeks. These are short term. This is 20 trading days. This is about a month. So there's a January high, potentially an April low, and then a high in August, and then potentially a nastiness. Okay. There's a similar pattern that we've been following, which is related to what's called the 88-year cycle. And so the 88-year cycle and the 7-year cycle, and also the 1987 market 38 years ago. And now I'm going to put up another chart, which is the chart of the Dow. And this one, you see 3 different patterns, and they're all related. Again, the bottom thing is like every 20 trading days is a month. So you're looking forward approximately 17 months into the future. Notice the green, the light green pattern, that's the 7-year cycle. The golden one is 1936, the 88-year cycle. And the dark blue is 1987. And the light green is 2017, 7 years ago. Notice they all basically go up into January. They have different variations, but they go up into August. And then notice what happens. The 88-year cycle is now goes into 1937, which was a crash year. The 1987 market had a crash, right? And the 7-year cycle in green, even that, it didn't happen in one day. It actually took 3 or 4 months, but that also represented a very severe decline phase. So we're looking for strength and continued upside until next August. And the immediate situation is that we're expecting a little bit of a pullback in November, even in December. As you see in this pattern here, in the 1987 market, it made a high early December. It made a low early January. Okay. This one was more bullish, but it had the same pattern. In 1936, you had a high fairly soon, a low at the end of November, a high January, February, and then it comes down, goes up again into August, and then we fall apart. So the map for the year is pretty straightforward. Okay. Now, I'm going to put up the more short-term influences so you can see those as well. This is the present S&P on an hourly chart. And you can see how the market took off. And it's right now it's at 6,001. Just now, for the first time in history, we just reached 6,000 on the S&P futures. And you see this is what we call a target line from our proprietary momentum balance technique. And at the moment, the target line is up at around 6,030. And it's probably going to shoot for that, possibly get there. But we're not expecting much higher right now. This topping area is likely between now and Monday. It should come down between the 11th, 12th into next week a little bit, and then go sideways into the 19th, maybe potentially a little higher. But ultimately, we're almost finished with this immediate explosiveness. And toward the end of the month, it'll actually come down in a meaningful enough way that if you didn't jump in, you could still get in. And it goes up again strongly in December. But we're looking for bullishness next year, and we're looking for a very severe breakdown at the end of next year. And we're looking for a bear market beginning there, which should work its way lower, at least for a year and a half into early 2027. Okay. So this gives you some idea what we're looking at in terms of the longer term and the shorter term and the intermediate term for the swing traders. I also want to announce on November 16th, write that down, we're going to have our next Trade Forecast Mastery Masterclass begin. And it will be, again, an upgrade and an expansion of what we've been doing. It's a 13-week program. All I can say is a whole lot of people are gaining from it, and it's been very, very successful. I'm getting extremely good feedback from the students. If you're interested, you can see the link below.